Good morning, everybody. Happy Thursday. It's September 4th, 2025. Great to be with all of you today. My name is Bob Lang, and it's time for our Daily Bites. And taking a look at the markets over here, looks like we've got kind of a mixed situation here. S&P futures up about 5.25 off the highs of the early morning. NASDAQ up about 30, seeing some good strength in some of the Mag 7 names. We'll talk about that in a little bit, and then some other earnings as well. Dow Industrials down about 22, getting hit a little bit because of the weakness in the guidance from Salesforce. So it's been a kind of a wishy-washy week so far. Nothing really too exciting for the bulls or the bears in the first couple of trading days in September. Now, we've talked about September being usually a difficult month for the bulls, and historically that's been true. So we have to be on guard. We have to be protective. We have to raise some cash. We have to take some trades off that are not working, size our positions smaller than we normally do, and have some protection on as well with some puts. So those puts actually help protect us on Tuesday when the markets were slammed down in a big way, nearly almost down 2% on the NASDAQ. So what do we see happening later on this week? So we've of course got the non-farm payroll report coming up for August. That'll be out at 8:30 Eastern time tomorrow morning on Friday. We had the ADP report came out this morning, less than expected on the jobs created in the private sector from ADP. We also did have some good economic data as well. Something that I pay attention really closely to is the productivity and unit labor costs. So productivity came in quite a bit better than expected at 3.3 versus 2.8 expectations, up from 2.4 in the first quarter. That's a great move up. Unit labor cost only up 1%. So we're not seeing inflation coming in from the labor side of things, according to these unit labor costs. Well, of course, we'll get wages coming in tomorrow with August non-farm payroll report. But the important thing here is that the economy is growing strongly and non-inflationary right now. So how does that equate to where Fed policy is going to go, monetary policy? It gives them room to say, at least present an argument saying that the economy is doing strong, doing very well, is growing nicely, strong, healthily, without the support of inflation. And we could certainly use that as a template for easing monetary policy going forward. I think what's going to happen is it's going to be a very, very slow walk down in interest rates towards their end goal. Now, what Chair Powell did say at the Jackson Hole meeting, percent premium in inflation versus the Fed funds rate. So in not so many words, he did express that fact there. So if inflation comes down to 2%, of course, St. Louis Fed President Alberto Musalem said earlier this week, said he thought that it's going to take about a little less than a year from now, where we're going to have inflation at their target of 2%. They can slowly walk down Fed funds from where they are right now at 4.25 down to where the goal is. So if the inflation target is hit, say 2%, a 1% premium on that would be up to about 3%. That would probably be where the Fed funds rate is going to land, and they will stop cutting rates at that point, at that level. So we're talking maybe between now and a year from now, maybe next October, 5 rate cuts between now and then. So I think we're going to look at the first rate cut coming in. Certainly the market is expecting one in September. This is certainly giving them a good argument to cut interest rates right now or in the next couple of weeks. So that's a real positive for if you're bullish. And I think eventually the stock market is going to sniff that positivity out from monetary policy. But going forward, I think that what we're going to see is maybe a rate cut in September. They may pass in October. Now, of course, that October number is about a 50-50 chance of a rate cut. And I think the next cut after that could be coming in December. So that would take care of 2. And then we've got 8 more meetings in 2026 where we might have 3 cuts. So you might see a cut every other meeting until the fall, especially if the data lines up appropriately. Perhaps even as Chair Powell's term is up in May, we could be at that target level by that May meeting, and we're down to 3% on the Fed funds rate. And certainly not everybody's going to be happy about 3%. But that's generally speaking where the Fed thinks that the appropriate policy is going to be at that level. So again, looking at the data over here, we saw some weakness in the ADP number, which came in about 8:15 Eastern time this morning, 54,000. Now, the thing that caught my attention here was July number was a huge revision upwards from a minus 23,000 to a plus 106. So it's almost a 130,000 change in private payrolls in the ADP number. That's a big adjustment, right? And of course, the number that they put out there initially before the July number came out, way wrong, right? Minus 23, we ended up coming in with a plus 72. So I was off about 100,000. So as far as the reliability is concerned of ADP number versus it's now, this is real data. This is an estimated data, like the non-farm payroll. So we should expect to see some differences, not quite as wide as we saw these last couple months. So we'll see if those adjustments are made later on this month. We are going to get an adjustment on the non-farm payroll from the last several months, an adjustment in about a week and a half. So pay attention to that. As it is for markets over here. So let's take a look at SP 500. We see a doji here that printed yesterday. We see a really tight range, but a much lower doji in on Tuesday. We do have a higher high and a higher low. So thankful for, if you're bullish, thankful for Google and Apple that helped carry the markets. Chicken money flow is very strong. It's been going higher day after day. We see good, strong volume levels as well too since the end of July. August has been looking real good with volume prints. We'll see if that carries over into September. The cloud is green. Moving averages are moving upwards. Now, what's interesting is about the 20-day moving average. I talk about the 20-day moving average quite a bit here, and this is this dotted line over here in between the Bollinger Bands. We've seen that the markets come back down to test that area, and I've been talking about that area as a point where we need to come back down and test that when we get too far away from that moving average, which we did back in early August. We came back down, tested it, got away from it towards the end of August, came down, tested it on Tuesday. We'll see if we can get through to those new all-time highs that we hit, that we printed last week, 65.01 last Thursday on the SP 500. NASDAQ also needs a little bit more work, but of course, at this Mag 7, which I talked about earlier, Amazon's strong this morning. So is Meta. So is Tesla. Google's off a little bit. Apple's off a tiny bit as well too. But some of these names, if they continue to show some strength and they move forward, going upwards, that's going to help carry the NASDAQ, and it's going to carry all the other groups as well too. As far as small caps are concerned, still seeing a big ceiling at the 225 level on the IWM. So if we can get through that 225 level, 235 level on the IWM, if we can get through that 235 level sometime soon, I think we've got a chance to get to the old highs. So that's going to be it, everyone. Have a great day. Trade well today. If you're in the chat room, I'll see you there a little bit later today. We're going to cash in on some nice winners as well too. Credo being one of them. We had some CRDO Credo calls in the service, and we're gonna cash those in. Huge winner there. Take a look at that one as well too. We may roll it up. I'm not sure what we're going to do yet, but we may roll it up. And earnings later on after the close is Broadcom, Lululemon, DocuSign, Asana, and Smith & Wesson. Along with Samsara IoT. So some names that are going to help move. Oh, also Guidewire, GWRE. So Guidewire is also one that I'm going to be taking a look at as well too. So pick and choose carefully. Don't forget, tomorrow is the non-farm payroll report. If the volatility comes down quite a bit today, you want to pick up some protection against that non-farm payroll report. Have a great day and have a wonderful weekend, and I'll see you guys all back on Monday. Take care. Bye.
Tainted love, tainted love. Now